Hong Kong has entered its first recession since the global financial crisis a decade ago. GDP has fallen 3.2% in the third quarter. Contraction of 1.3% is projected for the year. And our senior correspondent in Hong Kong, Roland Lim, has more.
Months of anti-government protests taking a heavy toll, and the Hong Kong economy is in a worse shape than thought to be. The preliminary estimate last month saw GDP shrinking by 2.9% year-on-year in the third quarter. Today's figure confirms it, but on a quarter-on-quarter basis, the contraction is even worse at 3.2%. The decline, as you say, marks the first year-on-year contraction for an individual quarter since the global financial crisis of 2009. However, the consecutive quarter-on-quarter contraction means that Hong Kong is officially in a technical recession. The weak performance, no thanks to a double whammy of a slowing global economy as well as the ongoing unrest that's worsened economic conditions here. Total exports of goods registered an enlarged year-on-year decline of 7.1% in real terms in the third quarter. Export of services, remember, most of Hong Kong's GDP is exports oriented. That deteriorated sharply, plunging 13.8%. Unemployment, the jobless rate, also edging up to 2.9% in the third quarter. Government economists cited surveys that in recent months indicating that local business sentiment also has turned very pessimistic. Downward pressure on the Hong Kong economy for the rest of the year as well. We are now hearing private estimates that the economy is likely to record a negative growth for the whole of 2019. The government, however, forecasting 0 to 1% growth. And 2020 isn't likely to fare much better either, because unless there's an end to the street protests. Financial Secretary Paul Chan has already announced 3 rounds of sweeteners totaling some $8 billion. But analysts say that's not likely to prop up demand until the protests stop. Frequent transport disruptions, violent clashes between police and protesters, the use of tear gas have battered the retail sector and scared off the tourists. Visitor arrivals in Hong Kong down almost 50% in the first 2 weeks of October. Visitor arrivals combined down 37% the previous 2 months. Hotels also saw its occupancy rate in September and October slide to its lowest level since 2003. That's a level not seen since the outbreak of SARS, the severe acute respiratory syndrome in Hong Kong. August retail sales also the worst on record. That's 23% down from a year ago. And September's also plunging some 18%. Shops, restaurants, other businesses across Hong Kong increasingly also having to close early, sometimes on a daily basis with little or no notice, simply because protests are happening. And small businesses have also had to close for good. So business activity in the private sector also at its weakest level in 21 years in October. That's according to a survey by IHS Markit. Demand from mainland China also declining to its sharpest pace according to since the survey started in 1998.